Welcome to Fomo Consulting for your daily AMC stock analysis video on Tuesday, May 4th. Ladies and gentlemen, this is looking just right, at least to me anyway. I'll give my brief price prediction at the end of the video, and as always, the apes are winning, the diamond hands are winning, and the retail investor is winning. So if you find this video informative and entertaining, please like, share, comment, and subscribe. It is a newer channel, and I would appreciate the support. Let's get into the video. Thank you, as always, to everyone who has liked, shared, commented, and subscribed. It certainly means the world to me, and I cannot be more appreciative, so thank you. So let's get into a quote. "Reality is wrong. Dreams are for real," by Tupac Shakur. I certainly believe this is true. Wall Street is trying to tell us we're wrong. The media is trying to tell us we're wrong. And I'll show you precisely why we are all right and our dreams are real and they will come true very, very soon. So I'm sure some of you, if not all of you, saw, I guess, the spat between Cramer and Buffett. I believe it was yesterday, and this has been an ongoing theme. So let me just rant for just a minute. I am sick and tired of hearing the media tell everyone that we are a bunch of wild, crazy kids on Reddit and Wall Street Bets and Stock Twits and wherever. This is the analytics from my very channel. Albeit a newer channel, but I'm sure it will mirror other YouTubers. It is clear we are not kids. We are not wild and crazy kids that don't know what we're doing. We are adults. We are responsible adults that have a vision for our future. We have a belief in our lives and ourselves. We have a vision of where we want to go and where we want to be, and AMC is one of the many things that we invest in to further our dreams and make our dreams become a reality. So quite frankly, I am tired of hearing the media denigrate the retail investor, that we're inexperienced and we certainly don't know what we're doing, because clearly we are adults and we know exactly what we're doing. So let's get into the broader market today. It was a tough day, right? NASDAQ absolutely plunged, had its worst day in quite some time. S&P was down, Dow Jones slightly up, but all three major indices had a very, very tough time at the opening. It certainly drug AMC down, and I'll show you that very shortly, as well as many, many others. And again, tech took a big hit, right? So here's AMC compared to the other three major indices. You can clearly see the green is the NASDAQ. It plummeted right from the opening. There was a lot of concern around rising interest rates in the near future based on some comments within the government. I almost believe that just the threat of it will help correct the market as opposed to raising interest rates at this time. I think there is some politics behind that, but you can certainly see where NASDAQ had a pretty hard day today. And the worst really in the last couple of months. So again, visual representation. I watched these two today on and off throughout the day, and they mirrored each other nearly to a T. They are certainly connected in some capacity, probably through ETFs and other capacities, but right from the bell, they both fell off a cliff, GME and AMC. And ironically, at 10 o'clock or so, they both hit a bottom. They both shot right back up shortly thereafter. They both fell off another cliff. Around lunchtime, they hit their lowest point, and then they both slowly but very surely grinded their way back up. This is no accident. This was obviously heavy shorting. This was heavy selling pressure, and I do certainly believe it was a large amount of covering of borrowed shares, and I'll show you why. So again, AMC chart overall, I think personally a very strong second half of the day. I do believe there was a lot of covering of borrowed shares. They are certainly, through their algos and other means and methods, keeping a suppression on this even as they do so, as the stock price rises. They are not going to let this shoot up right now. There's certainly no reason for it to. We need a catalyst, and I do believe we'll get one later this week. So let's take a brief look, at the bigger picture here. Going back a few months, orange bar is the last earnings in March 10th. You can certainly see where we were pressed down below the moving average. Moving average started at minimum flattening out. MACD nearly crossed over the signal line at that point, bounced, and we headed up towards our 1454 range to our more recent high. You can certainly see on the right side of the chart, we've been pressed down this week. The MACD has now crossed over the signal line, at least for today. A couple green days will correct that. But I am still exceptionally bullish about the remainder of the week. When in doubt, zoom out, right? So we are still clearly on an uptrend. The box you see in the center of the screen shows the 5 days. Certainly we've been pressed down 18%. 1 month we are down nearly 8%. But 3 months we are still up, depending on when you bought in, 20% up. Year to date, we are 343% up year to date. 1 year, we are 141% up. You show me returns other than GameStop and own that in another stock, and we'll see. We'll have a discussion. So let's compare GameStop, AMC to the rest of the quote-unquote smart money stocks, where we're supposed to stay on our lane, right? We're supposed to only do the big stocks and ETFs and leave all the trading to the big boys. So GME, obviously down, similar to AMC over the last week and the last month. Obviously heavy shorting, lack of a catalyst. 3 months, we are up nearly 79% for GME. Year to date, 753%. 1 year, almost 2,900% up on GME. Obviously, AMC, we just went through those numbers. Extraordinary returns on both of these stocks. I guess the kids, the inexperienced traders, know exactly what they're doing, which is why I believe there is such a vengeance and such a heavy short attack to teach us a lesson and certainly get retribution for what happened in January. We will have to earn this squeeze, no doubt. Apple, negative. Almost 5%, 5 days. 1 month, they have gained a whole 1%. 3 months, down 5%. Year to date, down 3%. 1 year, up 71 or close to 72%. Not bad if you're in it for a year. Compared to GameStop and AMC year to date, doesn't compare. Tesla, obviously 5 day, down 4%, been getting hit hard. 1 month down 2%, almost 3. 3 month down nearly 23%. Year to date, 4.5%. 1 year return, 338%. Fantastic returns over 1 year's time. Obviously, again, it has had a very long period or a long squeeze. They have at least shorted that one. Google, 5 day, up nearly 1%. 1 month, 4.4%. 3 month return, a little over 20%. Year to date, 31%. 1 year, 71%. So I would certainly say AMC, GME, and all of these other ape stocks, meme stocks, whatever you want to call them, are are certainly outperforming the quote-unquote smart money stocks, and I do believe there is some anger around that, because let's be honest, we just might possibly be smarter than them. So we should stick our money in a savings account and stay out of the market, right? We don't know what we're doing, so we should put it in a savings account. So a savings account as of today would earn you about 0.5% annually. So pretty sure that's not where I want to put my money today, right? You can put your money where you want to. This is certainly not financial advice, and I am not a financial advisor, just my opinion. So let's look at the options and the largest trades today. Very, very exciting. 3,800 contracts for a $10 strike call expiring this Friday. Extraordinary. $20 strike call, 1,300 contracts expiring May 21st. On and on and on. As you can see, very few puts, and if they are, they're not very big dollars, more than I've got in the market certainly, but certainly compared to these larger contracts, I do believe that large sale expiring this Friday pretty much should give you all the confidence you need for someone to put up that kind of money. So again, I've showed this before. This is updated. The battle zone, as I see it, is between 10 and 1250. You can certainly see the open interest on the call side on the left is far, far greater than the open interest on the put side, on the right side. I do believe they are scared to death of earnings this week and have exited most positions, and I can show you why I believe that. So again, exceptionally bullish. Today's basically bullish sentiment on the options chains and the options volume, 3-to-1. Friday we were a little less than 2-to-1. Extraordinarily bullish this week. So obviously the news is circulated around. The annual shareholder meeting was rescheduled abruptly today. I think that is actually great news. I think that is calculated. We don't know why, but I do believe there was a little bit of gamesmanship between the executive leadership of AMC by doing so. I don't believe that just happened today for no reason. But I do believe Thursday will be an exceptionally bullish day. At least that is my opinion. And of course, we're looking for that share recount, right? So again, anyone that tells you AMC doesn't have a future, this is from USA Today. As of today, lots of restrictions are being lifted constantly. Florida just lifted all restrictions. You can certainly see where restrictions are easing in the blue. Green is restrictions are lifted. This bodes very well for AMC as well as other recovery plays, just getting back to normal life in general, right? So I do believe that the summertime is going to be extraordinary, not only for AMC, but just all the beaten down companies, the beaten down stocks, tourism, travel, you name it. I think hopefully we'll all return to a normal life very, very soon. So again, just a reminder, Thursday, 5 p.m. Eastern is the earnings call. I do believe, at least my hope is they'll at least meet expectations. Currently around 150 million in revenue for Q1, keeping in mind that most of the major titles such as Godzilla vs. Kong and others will affect the Q2 earnings more so than anything in Q1. So we're not expecting a huge amount of revenue this time around, but certainly the estimates would say that the EPS, earnings per share, is certainly improving versus Q4. So let's look briefly, and I know I've shown this a day or two in a row, but I do think it's very relevant. So this is how the price acted leading up to earnings in March, on March 10th. Orange bar is earnings. The price, again, they beat us down, shorted us the week prior, started running up as we approached earnings, and we went right up to 14.54. Again, I think this is very relevant. So let me show you why I believe it's relevant. Let me walk you through this. So these, what you're seeing by the green arrow, and I took various screenshots throughout the day from Ortex. These are the returned shares and borrowed shares. Number on the left is returned, number on the right is borrowed. This was around 9:40 this morning. They had returned 173,000, borrowed 376. Go figure. They shorted us right now, right? About an hour later, they had returned 1.26 million, borrowed another nearly 3 million. Around lunchtime, 3.66 million returned, borrowed 4.86. Returned shares 3 million, borrowed 3.4. So as the day came to a close, 3.66 returned, 4.86 borrowed. So I'll show you why that's relevant shortly. So let's look at the short interest for today and some of the key data. So most importantly, let's look at the estimated short interest percentage of free float is 22.67. That's down just a little bit. That's a good thing. Percent of free float on loan, 35%, down just a little bit. Shares on loan has gone down quite a bit over the last week or so, by about 10 million shares. We're at 146. That's a good thing, and I'll show you why. Days to cover is increasing to 1.47. That has steadily been going up. I do believe we are in a 3 to 4 day range, depending on how you calculate it. Cost to borrow, again, is down just a bit, nearly 13%. Utilization has gone back to 100%. Yesterday, it was about 99 point something. So we're in fine shape there. I'll show you some key data. So in the center screen, you'll see a box. Those are the failures to deliver. 2.7 million shares as of the 14th of April, most recent data. We did have one more institutional buyer today. Fantastic. Follow smart money, right? They keep increasing their positions as well. Shares 100% owned. The stock's 100% owned between institutions, insiders, and certainly retail. Retail owns nearly 80%. Total volume today was 35 million. That was up about 4 million from yesterday. Short shares available. Take this with a grain of salt. 2.3 million shares available. That is about as high as we've seen it in a long, long time. And that is simply because they are returning those borrowed shares as fast as they possibly can. They are afraid of earnings coming up, and they're trying to exit their positions. Short borrow fee, 10.66, has gone down just a bit. Fintel, take that for what it's worth. So let's compare how the stock reacted, and I think this is probably most relevant to this week. How the stock reacted leading up to earnings in early November of 2020. You can see where we had actually 7 red days. They shorted it very heavily leading up to earnings. They were trying to pound it down. We were only trading at $2 at that time, give or take. So I'll show you how it reacted shortly after. As soon as we got to earnings, got past earnings, and keep in mind those earnings would have been for the summer, give or take. The theaters were completely closed at that time, and the price still ran up nearly $3 over a period of a few weeks from that point. Again, they had exited their short position, and I'll show you how that looks. So this is the Ortex data for that period of time, early November. So the gray volume bars in the back are the borrowed share volume. You will see where they borrowed leading up to the earnings, which is the orange bar in the middle. They were heavily shorting this down to earnings. But if you look at the indicators you can clearly see where they were ebbing and flowing leading up to there, and they were trying to exit their positions, albeit keep in mind it was at $2 a share. As soon as earnings passed, we got to the right of the orange bar. You can see with a big purple line, that's the cost to borrow, absolutely shot down. The volume fell off drastically, the share volume. They clearly were trying to exit their positions, and the price rose, as you can clearly see. And then it ran up, and then they started borrowing yet again and tried to start shorting it down. There is a very, very familiar pattern here. So let me zoom out. This is the March 10th, 2021 time frame, and I've shown this a couple times, but I think it's relevant. Leading up to earnings, shorted it down. You can clearly see that. However, the indicators were all trending downwards. So you had a lessening in free float on loan, which we have. Shares on loan trending down, which we have. Cost to borrow trending down, which we have. Estimated short interest trending down, which we are. But if you look right before earnings, they stopped borrowing because they were scared. Leading right up to that, though, they were borrowing very heavily. We got to earnings, price ran up. However, they had cleared their positions. They had started covering, which is indicated by a lot of those green candles. But simultaneously, they borrowed a ton of shares to wait for the stock to cool off, hit a peak, and then short it right back down, as indicated right past the $14.54 high that we hit at that time. So you can clearly see how they operate based on these indicators, and the volume is pretty clear. If you look over on the far right, that is as of yesterday. Go figure, the indicators are all trending in a downward direction. What we need to understand is obviously what's going to happen at earnings and beyond. But I can tell you, in my personal opinion, shorts do not like uncertainty. They certainly do not like late week uncertainty. They do not want to carry heavy short positions going into the weekend. As you recall, Porsche set off the Volkswagen Infinity squeeze on a Sunday very purposefully. So they are afraid of late week uncertainty, and I do believe they are exiting their positions as hard and fast as they possibly can. I do believe tomorrow, if not Thursday morning, we will see quite a bit of covering, and you will see a relaxation of the heavy shorting we've seen over the last couple of days. And they've certainly taken opportunity with a very red market the last 2 days. That's certainly helped them in their efforts as opposed to a bullish overall broader market. So again, I'm not concerned one bit about the last 2 days. So again, one more look at leading up to the March earnings. So if you look at the two suitcases on the diagram, you'll certainly see, and this is for illustration purposes, they have return shares, which are sitting down waiting to be borrowed again. They borrow shares at the top of the earnings, you can see by the volume bars. Then they turn around and they rinse and repeat this process. They have the borrowed shares, they short it down, they return them simultaneously, they borrow more, they wait for the stock price to kind of cool off, they take those borrowed shares, short it back down, return those shares, borrow more simultaneously, rinse and repeat, rinse and repeat. That is what's been going on the last several weeks. That is certainly what's been going on the last 2 days. And they are incrementally covering through algos throughout the day, which is why you see that somewhat consolidation. And today specifically, a very, very controlled, in my opinion, covering as the price rose just a little bit. But they are certainly not taking their foot off the brake. So again, bigger picture, you can certainly see how the stock reacted. Each of those orange bars are the date of earnings going back 1 year. Price runs up, they borrow a lot of shares, they exit their positions, then they reborrow and short it right back down. rinse and repeat, rinse and repeat. The second half of this chart is exceptionally impressive because they have borrowed a ton of shares, and I do believe during the baby squeeze in late January is where they really got in trouble. I think they over borrowed and over shorted, and they are carrying a lot of shares. You can speculate as much as me. I know that the numbers are in the millions. I certainly believe it is in the millions, and they are trying desperately to, by all means, to get rid of those borrowed shares because they are carrying, I believe, extra baggage. So as always, I have skin in the game. I am a diamond hander just like you, and yes, I have been bleeding daily. Gold price prediction, I still believe with 3 days left, earnings after Thursday, shorts do not like uncertainty. Late in the week leading up to a weekend, we do not have a ton of puts and open interest on the options. I do believe this price will rise. I do believe we'll see covering. If not tomorrow, we'll certainly see it, I believe, leading up to earnings on Thursday. I do believe 12 to 1250 is well within our possibility. We have done it many, many times. So last quote. In every single day, in every single walk of life, ordinary people do extraordinary things. Ordinary people accomplish extraordinary things. I firmly believe this by Jim Valvano, or Jimmy V. Unfortunately, and sadly, he died of cancer many years ago. The Jimmy V Foundation certainly lives on, but he had the famous line, "Don't give up, don't ever give up," as he was dying of cancer. But he was just a normal guy, just like us. Guys and gals, ladies and gentlemen, we will do extraordinary things. We have done extraordinary things, and we will continue to do extraordinary things above and beyond what the Wall Street wise guys would have us believe otherwise, what the media would have us believe otherwise, what the news articles from various sources would have us believe otherwise. We will and have and can accomplish extraordinary things. So as always, ladies and gentlemen, I cannot thank you enough for watching. If you enjoyed the video, please like, share, comment, and certainly subscribe. I would certainly appreciate it, as it is a newer channel. And as always, I hope your life is full of green candles. I hope you have a wonderful day. See you soon.